This is Boom Bust, and these are the stories that we're tracking for you today. First up, we're looking at how Bank of America fleeced borrowers who were rewarded HAMP loan modifications and what one couple in Montana is doing about it. They aren't taking it lightly. Then net neutrality is a term that didn't even exist 10 years ago, but today we cannot seem to stop talking about it. Julie Samuels, executive director of the Engine Founda, is on the program today and is giving us her take on the importance of net neutrality. And it's the end of the week, which means it's viewer feedback day here on Boom Bust. Edward Harris and I are addressing your questions, comments, concerns live on the show. You won't want to miss a moment, and it all starts right now. Our lead story today, Bank of America and HAMP fraud. Now, first off, let's discuss what exactly HAMP fraud is. Now, HAMP is actually an acronym for Home Affordable Modification Program. It's a federal program in the U.S. which was set up to help eligible homeowners with loan modification on their home mortgages. It was set up following the 2008 financial crisis in the context of the ongoing subprime mortgage crisis. Now, the goal of the program is to help struggling homeowners who are at risk of foreclosure by working with their lenders to lower monthly mortgage payments. So how does Bank of America fit into all this? Well, Bank of America's mortgage servicing unit systemically lied to homeowners, fraudulently denied loan modifications, and paid their staff bonuses. Yeah, bonuses for deliberately pushing people into foreclosure. So how did they do all this and get away with it? Well, the government's HAMP program gave banks cash incentives to modify loans under certain standards. And that was supposed to streamline the process. But in reality, Bank of America used it as a tool to squeeze as much money as possible out of struggling borrowers before eventually foreclosing on them. Not cool. Now, according to Bank of America whistleblowers, borrowers were supposed to make 3 trial payments before the loan modification became permanent. In actuality, many borrowers would make payments for over a year, only to find themselves rejected for a permanent modification and then owing the difference between the trial modification and their original payment. The bank did this by having employees instruct borrowers that documents were either incomplete or missing when they weren't even filed or were under review when they hadn't even been assessed for months. Criminal. Basically, Bank of America didn't want to hire enough staff to handle all of the loan modification requests that it was receiving. They then used these stall tactics long enough to ultimately force homeowners out of their residence and collect on the property. Now, if this sounds criminal, that's because it is. And while it might not yet be illegal, it is criminal, and that's why we're looking into it. Just 2 weeks ago, the Montana Supreme Court ruled that a case alleging that Bank of America deliberately led a couple into foreclosure could be tried. Now, it will be the first to go to the state Supreme Court, and thus will have huge implications for millions of homeowners in America. Now, while not everyone is covering this story, we intend to take a long and hard look at the facts for some time to come. Neutrality is a big issue in the tech world. If internet service providers can start discriminating against different types of content, then content providers will have to start paying. That's fine for huge companies like Netflix and YouTube, but what about the littler guys? Now, there's a big debate about this, and take a listen to what economist David Henderson has to say about it.
Net neutrality is a bad idea. The whole idea that people who use something in greater degree should pay the same who use something in less degree doesn't make sense. If I go to a restaurant and I order 2 steaks, I should pay more than you who ordered 1 steak. And it's the same kind of principle with net neutrality. These people are just sucking up lots of bandwidth, and it makes sense to charge them for that.
So charging for service is simple capitalism for Henderson. But for Julie Samuels, the executive director of the Engine Founda, net neutrality is extremely important. And I asked her what she thought of Henderson's argument. Take a look at what she had to say.
So I think that we're confusing a couple of things here. It's one thing to say you need to pay more for more bits. It's another thing to say we'll base how much you have to pay on what kind of content you are or what you're distributing. So that is to say that I don't care if it's Netflix's video or any other company's video. Quantity is different than the type. So maybe Netflix has to pay more for more amount of bits, but they should get equal access. And Netflix maybe isn't the best example because they can pay for that. But think about a startup company who's trying to get its content out, its product out, and they're stuck behind the line because other people can pay more money than they can. That's just not the vision of the internet that I would argue most people in this country and in this world have.
Okay, so what do you do if you're a telco that has invested in all of this bandwidth and one or two companies are using it all without having to pay any capital investment or make any capital investment, and then they hide behind net neutrality laws to keep from having to make some kind of investments, the same kind of investments rather, or paying for the bandwidth that they use? What do you think of that?
Well, so first of all, people have to pay for the bandwidth they use. It's just a matter, and net neutrality doesn't mean that you all get on for free. It means that you can't discriminate about who can get on, and you have to make prices reasonable. For instance, think about telephone wires for a second. You can have at the end in an office, you might have really fancy telephones or lots of receptionists answering the line. That's okay. So that means that people might have a better experience using your telephone system. But everyone has equal access to those wires. That's the principle behind this idea of a common carrier, and we think that is instrumental to the idea of the internet. I'd point out one other thing, I think, in response to that comment earlier. When you start talking about why do these telcos, what incentive do they have to upgrade their broadband? They've got a monopoly. And I hate to sound trite, but with great responsibility comes great power. No one else can get in there. They've got a government-granted monopoly to this stuff.
So what do you make of the Comcast-Time Warner cable deal?
Frankly, I think that a lot of the problems we're facing in this space are about monopolies, and that really worries me for that reason.
So I guess that leads well to my next question. Do you have any concerns about the Netflix-Comcast deal, and how do you think regulators should approach that one?
The Netflix-Comcast deal, or in particular?
Yes, the Netflix-Comcast deal.
I guess I'm more worried about the Time Warner Comcast deal, the AT&T DirecTV deal, these types of deals where the companies that all provide the pipes, provide the tubes, if you will, on which we're transporting content. The Comcast-Netflix deal, I'm worried about it for net neutrality reasons, but less so for monopoly reasons. That kind of deal I worry about, because what happens when Netflix gets prioritized service, when their content flows through more quickly, then other stuff automatically gets slowed down. It just gets pushed behind them in line, if you will. And that's unfortunate. Let me point something out. I think we talk about this stuff very abstractly, and it's hard to understand. But let's say you go and you're on your computer and you pull up a radio station that you like to stream, or a website that provides some content, and the website is choppy, or it's not working, or it's coming in slowly. Most people are going to go ahead and blame the website. They're going to say something's broken with the website. They're not going to say, my ISP is slowing them down, right? So it's very dangerous for those companies on the other side.
It's a very interesting and pretty good analogy, because I would say, oh, the internet, the website's broken, not the ISP, but it's always...
We all do that.
Yeah.
And I think the other thing that people don't realize that's really important for this conversation is that in the business of websites, if you will, latency really matters, like down to a millisecond. If a web page loads even the littlest bit slower, all the data show that really hurts a company. And think about it. Think about a payment processor, for instance. You pay for something with your credit card. You're using PayPal, right? And it slows down, and you get that little spinny wheel. And then maybe even your transaction times out. That will make you not want to use that company again.
It's absolutely true.
Right, and odds are it's the ISP who's doing that. So when the ISP can pick winners or losers, can grant incumbents who can afford faster access, it's really bad for competition in this country.
It's true. That pinwheel does not help any situation. But I want to ask you, has the FCC acted to protect net neutrality in the past? And if so, how?
So the FCC has acted in the past to protect net neutrality. In 2010, they issued this open internet order that we've been operating under until about 6 months ago that basically set up a framework of net neutrality. About 6 months ago, the court, a federal court in D.C. struck that down, of course. And this part gets a little bit in the legal weeds, so just bear with me for a quick second here. In 2010, so right now the internet is classified, we talked about this earlier, is classified as an information service instead of a telecommunication service. Because it's an information service, which is under something called Section 706, sorry, this is nerdy, I'll be quick.
No, it's good to know.
Because it's under that, the court said, 706, you can't do what you're trying to do. You can't protect net neutrality in the way you're trying to do it, FCC, under this section of the law. So we think that in order to protect net neutrality, as the FCC has tried to do before, and according to statements coming out of the FCC, they apparently want to do again, the legal authority only exists if they reclassify it as a telecommunication service. They want to protect net neutrality, but we think there really is only one legal route to get there, according to what this court said.
Huh. Now, I want to ask you, why is this debate just so contentious? And isn't there some sort of third way that we might be able to satisfy network neutrality without having all this blowback?
So I think it's so contentious. I think that's actually a really great and important question. I think it's so contentious because it really, people really understand the internet. They care about the internet. People rely on the internet every day, and not just for transactions, but for basic human communication, right? And I think that it really touches a nerve with people when they feel like their internet is being messed with. And I think that's really important. And I think you'll continue to see that throughout this debate. As to your question about whether there's a third way, I think there are alternative options that will help. I think we can't avoid this net neutrality debate. We're stuck with that one, and we have to see it through. But there are other things that can help. I talked a little bit earlier about other ways to increase access to the internet. Laying fiber, having municipalities, cities and towns lay fiber so that there are other ways to get online. So you're creating competition in the marketplace. Same thing with wireless, giving more access in the wireless spectrum. So let me just, I know I'm talking a little bit wonky again, so let me take a quick step back. Most places in America, you've got probably one choice to get online in your house, and it's probably Comcast, AT&T, or Verizon. In some cities, you might be lucky to have a second choice, but that's incredibly rare across the country. So these other things I'm talking about create that kind of competition, so people can pick their own way to get online.
That was Julie Samuels, Executive Director of the Engine Research Foundation. Time now for a very quick break, but stick around because when we return, we're bringing you the best of the very best from this past week. Plus, Edward Harrison and I are tackling your viewer feedback in our weekly accrued interest segment. But before we go, here are a look at some of your closing numbers at the bell. Stick around.
I would rather ask questions to people in positions of power instead of speaking on their behalf. And that's why you can find my show, Larry King Now, right here on RT. Question more.
Welcome back. Now, it's the end of the week, and that means it's time for our Best of the Best segment. Now, we covered a lot of ground this week, and let's start off with Mr. Paul Craig Roberts. Now, he argues that the powerful have more of a say in how our economy and our political system work, and a lot of people would agree with him. Then we have Eve Smith, who blasts private equity claims of job creation, saying that it's a very dubious claim in her view, and I gotta agree with her. Now, Doug Casey, he talks about government inefficiency, but wait till you hear how much inefficiency he sees. Amir Sufi argues that we need to forget about banks. Instead, we should write down some of the debt for underwater households in order to help the economy in the long run. And Chris Martinson discusses the risks that still exist in the financial market post-crisis and what he thinks we should do about it. But we start off this week's Best of the Best with Mr. Peter Schiff, the one and only. Now, he discusses why he now uses BitPay for transactions in Bitcoin. You'll remember that he was not for Bitcoin and probably still isn't. Now, the interesting bit is that he says that he doesn't really want the Bitcoin at all, but what he actually wants are the dollars, because he says dollars have a certain value, and inside the U.S., dollars are legal tender. Dollars are what his employees need to pay their bills and what he needs to pay the rent. Not to mention, dollars are what he needs to expunge his U.S. tax liability. Check it out.
I want to make it easier for people who own Bitcoins to take something off the table and to turn some of their digital currency into real money, gold and silver. And by partnering up with BitPay, it makes it very easy because the people with Bitcoins can use their Bitcoins to pay, but I don't get the Bitcoins. I get dollars. See, I'm not really accepting Bitcoins. BitPay is accepting Bitcoins, and they're turning around and giving me dollars. So my customers get to pay with Bitcoin, but I get dollars, which of course is what I need because I got to pay my rent, I got to pay my salaries, I got to pay all my other expenses and my taxes. So I need dollars when I'm running a business in the United States. I don't need Bitcoins.
The powerful groups are the ones with the money and the ability to align themselves with U.S. foreign policy. For example, Wall Street is a great looting mechanism. The military security complex, the agribusiness, Monsanto, all those people, the oil, timber, and mining, the extractive industries, and of course the Israel lobby itself. These are the powerful interest groups that essentially determine the domestic and foreign economic policy. And the two scholars that you named, they made the point very strongly that community interest groups and citizens have zero input into the formation of policy. This has been confirmed in other ways, Aaron. Recently, a test was made. 2 letters were sent out to congressional offices, and one asked for a meeting with a representative with a collection of donors, and the other asked for a meeting with a collection of community representatives. Well, the first letter got the responses. They were all willing to meet with donors, but they weren't very interested to meet with the community interest groups from their constituency.
How many jobs do PE firms create, if any?
That's such a dubious argument. It's actually offensive. PE companies routinely cost cut, fire people. There's a thin slice of companies. Now, admittedly, there's a thin slice at around the 350 million in transaction size and below, where the PE funds, there actually is academic data that says they do invest and they do make operating improvements because those are companies that basically weren't professionally managed, so they come of a size. So there is a slice where you can make this size slice, where you can make this claim where there's virtue. The problem is that's not where the bulk of the money in the industry is. The bulk of the money is on the high end, where they come in and they do financial engineering, very aggressive headcount cuts, very aggressive supplier squeezing.
First of all, most of the U.S. government serves no useful purpose. Most of the U.S. government is a dead hand on society. And I think to start with, we could abolish about 90% of it, quite frankly, including most of the military. I know the average American loves the military. It seems like it's the only part of the government that kind of works. But actually the military, the U.S. military is not protecting us. They're actually an immense danger to us by having combat troops in 100 different countries. All these welfare programs should be abolished. The post office should be privatized. No, it'd be quite possible to cut the U.S. government by 90% and cut their taxes by that amount and so forth. But it's not going to happen because the deep state is totally insinuated in society, and half of Americans are net recipients of income from the government. So no, nothing's going to change until we have a genuine catastrophic crisis.
Think about for a second the way a debt contract works. Let's think of a house. So a house worth $100,000 and you have a mortgage of $80,000 against it. If house prices fall $20,000, then who takes the loss? Well, anyone with a basic finance background knows that the homeowner takes that full loss. They lose all of their equity before the creditor takes even $1 of losses. The point that we're making in the book is that who exactly are debtors? Debtors tend to be lower net worth, lower income, lower credit score individuals, and they have a very high propensity to spend out of negative shocks, meaning when their house prices fall $20,000, they cut back spending in a very strong way. And when they cut back spending in this way, it essentially overwhelms the economy. And that's exactly what you see in the data. If you look at the shock to spending, even before the financial crisis, let's say in August and even early September 2008, it was already of an unprecedented proportion. The cutback on autos, the cutback on durable goods like refrigerators, sewing machines, these were just very dramatic pullbacks in spending. And that's something that basically throws the entire economy into a tailspin. So the central argument that we're making is, if you have a very narrow focus and all you think about is, well, we have to protect banks, we have to protect banks, you fail to recognize that actually forgiving some of the debt, while it may impose a short-term loss on mortgages, is actually better in the long run for the overall economy.
What we don't like when we're looking across this landscape is we see everything that we would characterize as a risk or a pressure on the international financial system is now larger than it was in 2008. And those pressures are things like derivatives are 100 trillion higher, the too big to fail banks are even larger, sovereign debts are higher, not lower. We have all-time highs now in consumer debt back on the books. And what we don't have to support all of those things is that resumption of world growth, which our hypothesis is we are not going to see that with oil over $100 a barrel, which we think is a permanent condition. So that's the pressures we see building up. Resources aren't there in the cheap ways and amounts we need to have the growth that can sustain all of this additional debt and leverage that we're piling back into the system. And that's a scenario, I can't control that, you can't, nobody listening to this can, but what you can control is how exposed you are in case that scenario doesn't work out. And that's where getting out of debt helps, that's where investing in your homestead, growing some of your own food if possible, those sorts of things. If you can do those are really good at adding resilience into your personal landscape.
That was the best of the best from this past week. Time now for our weekly accrued interest segment. It's accrued interest time with Mr. Edward Harrison. Now, every Friday, we put you, the viewer, into the driver's seat, letting you steer the show with your comments, questions, and concerns, all sent to us throughout the week via Twitter, YouTube, and Facebook. Let's dive right in. First up, we have Mr. Zach888, who writes, "Crony capitalism, question mark, nah, this merger is capitalism. There's no such thing as good or bad or crony under capitalism. If it makes money, then it's considered correct, either through hook or by crook. You have idiot libertarians defending capitalism by naming monopolies crony. I'm sorry, but capitalism is immoral. That goal is to make money." Pretty heavy stuff, Ed. So what do you think? Capitalism? Immoral? Yes? No? Maybe?
I don't know where he's coming from. Perhaps it is amoral because, at the end of the day, I think really what it boils down to is that, people do want to make money. But let's put some parameters around this. We have a quote here that I want to put up. There is, in the operation of a market economy, only one instance in which the proprietary class is not completely subject to the supremacy of the consumers. Monopoly prices are an infringement of the sway of the consumers. And that's from Ludwig von Mises, who is an Austrian economist.
I love that actually.
A free market economist who basically said that monopoly was an infringement on consumers who should have sway. And if you think about this, then the question is how do companies get monopolies? Milton Friedman would say that in most cases it's government intervention that actually creates the monopoly in the first place. And they're the ones who create the preconditions for the monopoly to exist. So the question is, regardless of whether you believe government has created this monopoly, what do you do once that monopoly comes into play? And I think what you have to do is you have to free up competition. Friedman would say, have free trade. But in this case, what we're talking about is a huge capital investment in internet technology in order to get competition. And my view is that you should definitely just have the government build a competing route with all of the cable companies, and then let it go up for free trade to anyone who wants to come. So that pipe is open for free competition, and anyone who wants to use that pipe can do so, and in that way you can have more competition.
You know, what I think is interesting about this, we talked about this obviously before we get on television, and you said, you know, my knee-jerk reaction was like, no, capitalism isn't amoral. It's many things and it might not be moral, but I don't know if it's amoral. And you said it's more about market structure, which I think sums up everything you just said. And it's true, market structure is so imperative, and it's something more than just moral or amoral. It has more implications, I think, and you put it very well. Now, our next question comes from Hale O. Bend, or it's Hale Zero Bend, who says, why do fools keep flocking to LV, Las Vegas, to lose their money? Clearly, folks will never learn until they are destitute. So, Ed, will folks ever learn, or is Halo Ben right?
That is very funny. It seems that, things are bubbling up in Las Vegas. But, what I heard very interestingly is that it's on the coast. There was something in the New York Times that said it's on the coast where you're getting prices rising so high now that it's almost better to rent than to buy. Places like Las Vegas and Phoenix are actually not at the forefront of this increase in house prices.
Okay, so there you go. Now, another remark regarding the same episode comes from Gidal Kane. I'm sorry if I butchered your handle for YouTube, but you write, one of the best shows in a long time, excellent guests and topics. We want to say thank you. we really, really appreciate that. Thank you very much, Mr. Kane.
And he's talking about Eve Smith, by the way, and that episode that we had with her.
And I would agree. She is one of the best guests, and we like the topics as well. Now, talking about one of our favorite guests, Eve Smith, that's obviously what he was talking about. Now, we want to move on. Next, we have a comment from Nick Hill about our guest, David Henderson. He says, quote, Mr. Henderson appears not to understand the concept of net neutrality. It has nothing to do with all-you-can-eat bandwidth packages. It is about ISPs deliberately downgrading performance to specific websites in order to leverage their physical monopoly of the cable in the street. Now, what do you think of this, Ed? Is Mr. Hill correct, or is Mr. David Henderson correct? We have 30 seconds, but I want to hear what you got to say.
Well, going back to what I just said, yeah, the monopoly, you want to get rid of that monopoly. And then on the other side, our guest earlier today was talking about, yes, when you see downgraded service, it's the ISP who's downgrading that service, and you blame then the company, the content provider, and that content provider loses money. They're using their monopoly to disadvantage certain content providers over others, and that's what net neutrality is all about.
Well said. That's all for now, but you can see all segments featured in today's show on YouTube at youtube.com/boombustrt. We also love hearing from you, so please check out our Facebook page at facebook.com/boombustrt. Please tweet at us at Aaronade, at EdwardNH. From all of us here at Boom Bust, thank you for watching. Have a great weekend. Happy Memorial Day.